Well, this move really shouldn't have been much of a surprise. Last Saturday, I warned all of our members on Discord that if they weren't comfortable with their positions, they should consider locking in any purchases before Sunday night when the markets reopened. Ray Charles could have seen this price increase coming. It happens every time there's an extreme fear in the market or geopolitical concerns, as people always run to gold and silver for safety. This time was no different. But I don't know if anyone could have anticipated how significant this move was going to be given the perpetual headwinds gold and silver have been facing. And if you want to talk about finishing a week off strong, how about gold being up 3.4% or $64 and silver being up 93 cents or 4.2%? And that's not for the week, folks. That was today alone. It's been absolutely spectacular watching this move off of the lows of around 1820-ish. While it's great to see gold respond, it's important we understand why it's up because that influences where gold and silver will go from here and what you have to consider in terms of purchases. Let's start by taking stock in where the markets are right now, as I think this is very interesting. First and foremost, and maybe the obvious, is the war premium. I've already mentioned that, but that's just the tip of this proverbial kind of iceberg. Another variable we have to consider that are driving prices higher are those investors that did some short covering today because frankly, nobody wants to be open or exposed going into a weekend when we're expecting more intensity in the fighting in Israel. The next point is really about technical analysis. And on the 5th, before we had this issue in Israel, we saw a death cross in the moving averages for gold. As a quick review, that is where the 50-day drops below the 200-day moving average, which is often a very bearish signal. But fast forward today, Friday the 13th, can't make this up. And we're just within a few dollars of reversing that trend, which is very, very bullish. We've also seen bond investors fleeing from the market as treasuries are not being seen as a safe haven, thanks largely to some of the crazy rhetoric about bombing oil fields and concerns about Iran shutting down tanker access. We've also seen oil prices spike, and we all know that higher oil prices tend to lead to higher gold prices due to inflationary concerns. Speaking of which, there's also significant concern about a second wave of inflation. And since oil is life, higher inflation won't be too far behind. Sadly, we have countries readying themselves for war and leaders that seem to be stoking the flames of this developing fire. All of this means that the economic impact could be very significant. This is why I think you should expect gold and silver prices to continue moving up and to the right. There are very few guarantees in this world, but I'd almost take any bet that gold and silver will be going much higher in the short term while this war continues to escalate. Regardless of how awful of a reason why gold prices have spiked, in just a blink of an eye, the headwinds for metal prices have subsided, and now the wind is firmly at gold and silver's back. This places us stackers in a very challenging and interesting position. Do we buy more right now to lock in more purchases before prices go higher? Do we sell and take some profits because spikes like these almost always come back to where they were, like when we saw what happened with the Ukraine war? Do we do nothing? Or do we do something in between? Well, let's just eliminate the obvious. Selling your physical holdings just doesn't seem like a reasonable consideration at this moment. But hey, if you want to sell, shoot me an email and let's make it happen. While it's true that things like war premiums are almost always taken back by the markets, I will also remind you that it took almost 6 months for that to happen last time. So while doing nothing is sometimes a very wise approach to situations where we lack clarity, I think we can do better than that in this situation. That leaves us with having to choose between trying to get as much as we can right now or doing something in between. And I'll try to simplify this as much as possible. If you weren't buying gold in the low 1800s and when silver was in the low $21 range, why on God's green earth would you be buying right now? We have been over this over and over again, but bad investors wait for price confirmation before they take action, which almost always results in buying higher than you should and selling lower than you should. I know this sounds harsh, but we've spent the last 2 years talking about this market and trying to prepare you for the inevitable back before it was imminent. Buying now would be a form of price chasing, and that is a very dangerous habit, even if it works out for you right now. Let me share a few words of wisdom and adages about the markets. 1, the way something goes down is often how it goes back up. Just look at the last 2 weeks if you need an example. And 2, markets don't just go straight up. There are always pullbacks at some point. Now, the pullback may be higher than prices are today, but at least you will be practicing the correct behavior you need to be a successful investor long term. I know this especially hurts if you're a new stacker or someone who's still working to develop your positions in physical metals. This leads me to my Goldilocks solution, and let me remind you, I can't tell you what to do. I can only tell you what I'm doing. The something in between solution is rather straightforward, and given the broader concerns about the global economy, especially here in the US, it just makes sense to me. First, take that stacking budget and secure two things. One, make sure you're out of debt. I happened to look at my credit card bill recently, and did you know the current interest rate they are charging is 28%? 28%. So if you're carrying any kind of variable rate debt like credit cards, get yourself out of debt and don't worry about what metals are doing. Focus on saving yourself interest fees and locking in a savings of 28% by cutting out that debt. Related, we truly don't know what this world will look like in light of this war. So the second part of this first step is securing your emergency fund, or call it your dry powder fund. Even if you already have one, I would add a little bit more to it. In fact, just yesterday, I added an extra $1,000 to my, let's call it the mattress fund. With everything going on, the last place I would leave my emergency fund is in a bank. There are just too many better alternatives. The next thing you can consider, which is what I've been doing for months, is continuing to add to my stock positions. We've seen physical metals take off, but mining stocks still remain depressed, and some have not had the same proportional move. This could be a great time to add to some of those positions, especially if they're already down, because at least you can lower your dollar cost average. Related, this gives you an opportunity to take advantage of any stocks that are really starting to take off, where you could potentially sell later and exchange your paper mining stocks for physical metals. Let me give you an example. I own shares in Hercules Silver, which was down about 20% 2 weeks ago. I started adding to that position on market strength, and now the stock is up 57%. If I have to buy at higher prices, at least I'd rather be doing that with gains from somewhere else as opposed to fiat that I had to earn with my physical labor. Let's also be really clear. Hercules Silver is an exploration play, and that isn't where I suggest you put your money right now, especially if you're just getting started. I would be putting my money into some of the bigger companies with greater stability, earnings, and dividends, like your BHP, your Rio Tinto, your Barrick Gold, and companies like that. At least with some of those companies, I can earn, or you can earn, a quarterly dividend that's somewhere between 5 and 9% while you seek out safety from what's going on in the market. If you just can't help yourself and you feel this need to add to your stack, at least control what you spend on premiums. You can't control what price does, but you can control how much you spend over spot. So look for sales and look for deals where premiums are under $2. Maybe that means saving up for a kilo or 100 ouncer. Like I always tell you, it's about the spread, and you have to let math drive your decision. Finally, find peace in the reality that there are always pullbacks that can become incredible buying opportunities. Even in the strongest bull markets, pullbacks of 20 to 30% or even 50% happen. I wish there was a flashing neon light pointing to the path that you should take, or even a burning bush that would speak to you and guide us all. All you can do as an investor is try to make the best possible decision you can with the information you have available at the moment. What I do know for certain, as I reflect back on my life, chasing has never served me well. Be it fast cars, fast women, or fast money. FOMO is real, and my hope is that you use your emotions to help you think and not think with your emotions. In the comment section, what are you doing right now? Are you still stacking, or are you waiting on the sidelines for things to cool down, or doing something else? How high do you think silver and gold will run before there is another buying opportunity? Or simply put an A+ in the comments to let everyone know that you always stack smarter and never stop learning.